back. You're watching The Money Show with me, Kavita Thapliyal, and there are a plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today, I have with me Shweta Jain from Investography. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Hi, Shweta. Good evening. Welcome to The Money Show. And let's begin, Shweta. First question is from Suresh, and Suresh writes to us saying that he started investing in Quant, Axis and DSP small cap from last month, and he wants to know if these three small cap funds are good enough to stay invested or continue investing. We don't have the details, in terms of other investments in mutual funds apart from these three. So I think his concern is majorly being invested in small cap and these three funds of small caps.
Hi, Kavita. Thanks for having me on the show. So, Suresh, it's great that you've started investing, but all of them are small cap, and I think that's not really a great idea, especially when you're starting off, because small cap will see more volatility. You will see more ups and downs in the value of your portfolio. So that may actually deter you from further investing. So I would recommend that you either add on or stop investing in one of these. I know it's been just a month, but stop investing in at least one of these, if not more. Start off with building a more core portfolio of large cap funds, something like a DSP Nifty 50 instead of, say, a DSP small cap would be a good idea. It will give you a good solid background and less volatility in terms of long-term investing. You will be more calmer as an investor, and as you go along, of course, you can keep adding on small cap, so that will give you extra returns, because I think that's what you're looking for when you're looking at investments, right? So make sure that you first have a solid background, and then you look for higher returns.
All right, we move on. Shweta, we'll take Indra Kumar's question, and he sent us his portfolio, wherein he's invested in Bandhan Nifty 50 index, ICICI Pro Nifty small cap index, Navi Nifty mid cap index, Mira Asset Tax Saver, PGM India Flexi Cap, Mira Asset EV and ETFs fund, Mirai Global AI and Tech ETF, and he also would like to know if the allocation is good enough for his future, and he wants to know if he can stay invested in this portfolio or not. So heavily tilted towards passive strategies, and he's also got sector specific funds.
Yeah, absolutely, Kavita. I think he's quite somebody who's learning mutual funds and reading a lot about it. So passive funds are something that he's inclined to, which is good. But you don't forget that active funds have their charm too. In terms of sectoral and thematic funds, I'm not really a fan of these funds because they can be quite highly volatile, and especially something like an AI, EV. These are really upcoming sectors, and really something that we don't know what will happen and when they'll really pay off. So I would recommend that when you're building your funds, when you're building a portfolio, have a good diversified portfolio, mid, large, small, have a good combination. Thematic could be maybe up to 5-7% of your portfolio, not more than that. You do have slightly higher exposure, what I can see. And while EV may be the future, and you do think that it'll pay off heavily, I think if there are good companies, even the regular funds will pick those up. So I don't think you need to do such actively sort of managing. I think you've taken on the role of a fund manager here. So unless you're going to do given more time to this portfolio, I think you should maybe add some more active funds and not thematic funds. That's just my 2 cents.
On to our last question on the show today, Vasanta Kumari, and very interesting question. She wants to understand if mutual funds give monthly pay dividends.
So mutual funds cannot give you regularly, as in guaranteed. They can give you regularly, but not guaranteed dividends, which is why we recommend something called a systematic withdrawal plan from debt or hybrid schemes. So if you need immediately the dividends from this, so if you need like a regular monthly income from this, You can maybe invest in debt funds, look at short-term and long-term, a combination of these, and then start an SWP, which is monthly. You will get an amount from your portfolio, which is similar to your SIP where you put in the money, but this is an SWP where you take out that money. So systematic withdrawal plan may be a solution for you. If you do have time, say maybe 5 years down the line, you need that monthly income, you don't need it now, you can opt for hybrid schemes. You can look at a combination of, say, hybrid and debt. You could look at a balanced advantage or balanced fund and a bit of debt. So this could give you a good mixture of growth and regular income.
All right, I think that will be all as far as queries are concerned. Thank you so much, Shweta, for being on the show and helping our viewers with their financial portfolio queries today. And in case you want to send us your mutual fund portfolio or anything related to your financial planning that you want to know from us, do send us your queries on our WhatsApp number, which is 8657974571. You can also email us your questions on themoneyshow@etnow.tv, the only place where we do your live financial planning. Thank you so much for watching. Goodbye.